I think we can all agree. Crazy real estate market, right? But is waiting until next year the right solution for you to buy your next home? That's what this video is all about. It's one of the hottest questions that we get asked in our buyer consultations. I'm gonna walk you through some insights so you can determine if now is the right time for you to buy your house. So you're gonna walk with me. I'm gonna go share a few screens with you. So will prices drop? Another way to frame the question is, am I buying in an inflated real estate market? Well, to understand the answer to those questions, you got to go back to the past. So 2008 was a tough time in real estate. Property values took a dramatic drop, all created around bad lending standards. Today's market is very, very different. We have high lending standards, rising rates, great equity positions, and a robust demand. Rising rates is actually a good thing for our market. There's not enough houses and too many buyers. So as these rates rise, it will unfortunately pull some buyers out of qualifying to purchase in today's market. However, those who stay and purchase a property that can buy and do have the capacity to purchase will reap the benefits of appreciating values in the next couple of years. So a great example of that is going to be this chart provided by CoreLogic, also found through Fortune magazine. It's an example of appreciation over the last couple of years from 2018. So as you can see, the average has been just below 5% all the way through 2020, where property values took a dramatic increase, all created through tight supply of COVID and tight supply of housing during that time frame. Property values did increase at an accelerated rate way into the 20% range, and expected to do another 11% at the end of this year of 2022, and then most likely 4% for 2023 based on Fannie Mae's forecast. So what does that mean? Well, if you're buying a house and let's say you're purchasing a home at $250,000, that $250,000 property today will be worth about 15% more at the end of 2023. That's about 30 to 40,000 increase in value. So two ways to look at it. If you bought in that time frame, which is today's market, you would gain about 30 to 40,000 in equity. If you waited, that 30 to 40,000 would become that higher price point that you start to buy your house. So some really good perspective on how that looks. Second slide I want to share with you guys is the wealth building in real estate. So how does this all work? And what does this mean in form of dollars? So taking that same example, 250,000, holding this property for 6 years, that property would be worth 344,000 after that 6-year period at a rate of 5.5% appreciation. To break that down, you have home appreciation, 94,000 for that 6-year period. Amortization gain, which means the decrease of the balance on that mortgage, about 28,000. So 6-year period, it's a growth of 122,925 of equity between the time you bought it and that 6-year period. To slice that up just a little further, if you purchase that 250 and you place the minimum 3% down, about $7,500, that $7,500 investment turned into 122,000 after that 6-year period. And to take it even a step further, if you kept it for 10 years, it then turned into 314,000 over that duration using that factor of 5.5%. Rent versus buy is another great component of understanding whether it's a good time to buy. Not everyone will qualify, but if someone does have the capacity to purchase in today's market, here's an example of why buying versus renting is so important. Average rent in today's market, about $1,800. If we use that 250 example, 3% down, about $7,500, that mortgage payment would be about $1,987 with taxes and insurance. So the rent, $1,891, $1,987, a little higher. But if you look at the growth rate of rent at a 20% increase year over year, that 1891 would translate to 2160 in the next 12 months. Waiting for 12 months would also create an increase in value. We talked about appreciation. So that same property would then be worth about 563. If rates continue to accelerate at 5.875%, that same house a year ago would then be 2192 per month, which means that $205 a month more, $13,000 higher. These are the reasons why buying a home versus renting is so important. Capacity is important. Qualifying is important. But having a good discussion with a mortgage advisor to give you the right steps to prepare for when it is the right time to buy is a great first step to do. So guys, have a great day. Don't forget to like, subscribe to our YouTube channel. I'll see you in the next video. Bye.